Are you someone considering a cash out refinance or heard the term and wondering what a cash refinance is, how they work, what are the benefits? Well, in today's video, we're going to dive into that. Over the last year, home prices have appreciated substantially across the United States, and there are a lot of people out there sitting on a lot of equity because of where home prices have gone, and they're looking to take advantage of that equity by pulling some cash out and doing some improvements to the properties, potentially paying off some debts, and want to know how the process works. So we're going to take a little bit of time and dive into that process, help you understand it so that you can make informed decisions when considering whether or not it's a good fit for you. My name is Jeb Smith. I'm a real estate broker here in Southern California. I'm not a mortgage professional, and the reason I bring this up is because I have no skin in the game. There's a lot of people out there that make these videos that could potentially benefit from them by you refinancing. And I have no benefit. There is no benefit for me giving you this information other than to make sure that you're informed, make sure you understand the information so that you can make the best decision for you. But what I will say is if you do need a good lender, you're considering a refinance, click that link in the description below. I'll connect you with somebody that can guide you through that process and take good care of you. So the very first question we're going to start with is, what is a cash out refinance? Now, for this example, we're going to assume that you have a $300,000 mortgage. You want to take about $50,000 out of your property. So you're going to need a $350,000 loan because you have to take your existing mortgage plus the cash out that you're going to get from the loan and add that to your current mortgage in order to pay off your existing mortgage. So we're going to assume, again, you're getting a new loan for $350,000. They are going to pay off your existing loan of $300,000 minus any closing costs, and you're going to get that remainder of the cash in your bank account. So that's what a cash out refinance would be. It's when you're paying off your existing loan and you're actually getting additional cash on top of that to do whatever it is that you want to do with that money. Again, it could be used for home improvements. It could be used to pay off debt, a variety of reasons. And at the end of the day, most of the time, the lenders don't really care what you're doing with the money. It's up to you how you decide to spend it. But some things you need to consider when going through that process. And that's, when does it make sense to consider doing a cash out refinance on your property? Again, some of those reasons would be when you need cash out for various reasons. Maybe you want to pull that $50,000 cash out and you have $50,000 in debt to pay off. And that monthly debt every month is costing you, say, $700, $1,000 per month because of credit cards or whatever it is. You're able to pull that cash out of your property, pay off your debt, whatever those debts would be, and then your mortgage goes up by the $50,000 that you finance, but typically that's going to be at a much lower rate than you would be paying revolving debt at, which means that you're likely going to save money by paying off that debt. Even though the balance of your mortgage goes up, you're able to take that money, pay off your existing mortgage along with that debt, and hopefully end up saving money by doing so. Now, one thing to keep in mind when you are considering doing a cash out refinance to pay off debt is that you can't go right back into debt again. Otherwise, the cash out refinance didn't really benefit you. And the reason I bring this up is because I've seen it over the years. People pay off their debt, by pulling cash out of their property, and then they go and end up running the debt right back up, and now their mortgage payment is higher than it was before, and then they have debt on the books again. So at the end of the day, the benefit's not really there if you're planning on running the same amount of debt up again. Now, in addition to that, there might be another opportunity where it could make sense for you to do a cash out refinance. Maybe you have a higher interest rate loan and you're considering doing a refinance anyway to lower your payments, and you can end up pulling cash out of your property and still saving money every month on your monthly payments. That's a win-win, right? You can get better terms on your loan, maybe get some cash out, maybe you can pay off debt, maybe you can use it for home improvements, something that can hopefully help your bottom line. Paying off debt essentially helps your bottom line. Maybe you can add some value to your home by doing home improvements, essentially adding value to your home, especially if you're planning to sell it. I've come across many sellers over the years who needed just a little bit of cash to do some home improvements that could help them get quite a bit more money for their property property if they could just do a couple of things. And this could be a reason that you pull cash out of your property. But one thing you want to keep in mind when you're considering doing cash out refinances, or really any refinance for that matter, is, you've got to do a cost benefit analysis. How much money is it costing you to do the loan? How much is the mortgage professional that you're working with actually charging you to do that loan? And how much are you saving per month? Now, when you're not doing a cash out refinance and you're just doing a rate and term refinance, it's pretty easy to calculate. If it's costing you $5,000 to do the loan and you're saving $100 a month, that's going to take you roughly 50 months to recoup that cost. That's just over 4 years. If you're not planning on being in that property for 4 years, then it probably doesn't make sense to refinance. Now, it's a little bit more difficult to calculate on a cash out refinance unless you're paying off debt, because if you're paying off debt, let's use that same example. Say your payment actually goes up by $100 by doing that cash out refinance, but you're able to pay off $1,000 in revolving debt every month, you're actually saving $900 per month. And if it costs you $5,000 to do that loan, it's only going to take you about 5 months to recoup the cost of doing that loan. So in that case, it probably makes sense to do a cash out refinance. But you have to weigh the pros and cons, and you have to figure out the right scenario for you. Now, in addition to paying off debt and potentially using the money for home improvements, sometimes it's a good idea to do a cash out refinance if the numbers make sense to you. To take that cash and just put it in the bank, or take that cash and put it into an investment, maybe a non-risky investment that continue to just, slowly build wealth for you. But it has to make sense for you, right? It's not for everyone. If your payment's going up every month because you did that cash out refinance and you're not doing anything to generate income with that money you pulled out, you've got to figure out if it makes sense for you. Now, if you were able to pull cash out of a property, go invest it into an investment property that was producing some sort of cash flow every month, or you had some other investment that you knew was going to give you a specific return every month, then there's a way to calculate it too to see if it makes sense for you. But if you're going to just go pull the money out and go on a vacation or go on a trip to Vegas or what have you, that's okay if it's the right decision for you. For the majority of people out there, that's not the right decision. And I usually try to advise people against cash out refinances, pulling all the equity out of their property, unless they have an actual game plan of what they're trying to accomplish by pulling that money out. So if you're considering doing a cash out refinance, make sure you're doing it for the right reasons. Make sure you're calculating the cost. How much is it going to cost you to pull out that money? Does that make sense to you? If that money disappeared as some sort of investment, are you still okay every month making, your higher payment if your payment did go up because of that cash out refinance? Or are you in a position where you're pulling that cash out, even though your payment's going up, you think that you're going to use some of that cash out to continue every month to help you make that higher payment? If that's the case, then it's probably not a wise decision to do a cash out refinance. So again, if you're considering doing a cash out refinance, or even a refinance for that matter, make sure you talk to a professional. Don't call one of the call centers online. Make sure you're working with somebody that knows the business in and out, can break down the numbers for you. A professional out there will tell you when it's a good idea to do it and when it's maybe not a good idea to do it. They're not just in it for the loan, they're in it for the long-term success of their clients, to help them build wealth. And if they don't think it's a good idea, they'll tell them. And if you need somebody like that, again, there's a link in the description below. But if you're watching this still wondering, should I refinance, should I not? Do me a favor, check out this video here. I talk about when you shouldn't refinance, the mistakes to avoid when doing it. So make sure you watch that. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.